Hello everyone, let's look at the last part, which is end of year adjustments. So what are they? These are the changes which are made in the business at the end of the trading period. So as you know, at the end of each trading period, maybe there's some changes that might happen and we need to carry them to the next trading period. So that's what we talk about, end of year adjustments. These adjustments made in the books of accounts include accruals, prepayments, provisions, depreciations, and reserves. So we're going to look at one by one. So we're saying these are some of the changes as you're carrying out your accounting period. By the end, they might occur. And how do we make some adjustments in these changes? Accrual. Shall start with accrued expenses. The word accrued means outstanding, due, owing, unpaid. So we're here talking about if sometimes there are some expenses that are unpaid. So what do you do with them? These are assets that remain unpaid at the end of the trading period. Such expenses should be included in the profit and loss account by adding them to the value of the expenses. Assume you had electricity 10,000. On top of that, they give you additional information and say unpaid expenses, unpaid electricity of 5k. So that means in our trading profit and loss account, we shall get electricity of 10,000 plus the 5k that we have not yet paid to get the actual amount for electricity. So in the balance sheet, they appear as current liabilities. Since we are saying these are expenses that we have not yet paid, we have consumed it, but we have not paid for it. So in our balance sheet, it's a liability. We owe money to a given company or to a given business. Then B, prepaid expenses. Prepaid means to pay in advance. Again, sometimes you find maybe clients pay in advance, or you as a business, you go and purchase some goods and you pay in advance. So what happens to that? These are expenses which have been paid for but not yet fully used up by the business at the close of the trading period. Such expenses are subtracted from the expenses for the year, and in the balance sheet they appear as current assets. So again, using the same example of electricity above there, assume you had electricity you're supposed to consume of 10,000. At the same time, they say now prepaid electricity 5k. This time round, it means we are going to get 10,000 minus 5k because we had paid 5,000 in advance. So the real value for our electricity will be 5k as the balance. And then in our balance sheet, we shall post it as a current asset. I think that is clear. We have paid in advance. It's an asset to us. C, accrued income. Income that is not yet paid or outstanding or arrears. This is the income which the business has earned but has not yet received it. This income is expected to be added to the income which is already received in the profit and loss account at the end of the trading period. And in the balance sheet, it will appear as a current asset. So accrued income not yet received, but as a business, we assume we have got it. So we add it onto other incomes And then when we come to the balance sheet, it's also an asset to us. At any time, at any day, in any week, in any month, we shall get that money back, our income. And lastly, prepaid income, or income received in advance. Clients come and pay you something in advance, and yet you have not yet supplied them with the goods or the service. So what happens to such changes? We're saying a prepaid income is an advance payment by customers or services, but the business has not yet supplied them with the goods and services paid for by the close of the financial year. So prepaid incomes appear as current liabilities. We owe some goods, we owe some services to a given company, so we consider them as current liabilities because they're owed to the. So let's look at the accounting cycle. We start with the transactions where you make some dealings with customers or clients, and then from there you're going to post your books into the books of original entry, which is the journals. From the journals, we go ahead and post them into the concerned ledger accounts, ledgers. Continue, prepare them into a balancing of the real accounts and personal accounts, and then from there we come to our trial balance, and from the trial balance we prepare our final accounts. And in the final accounts, it includes both the income statement plus the balance sheet. That is our final accounts. So this is our accounting cycle, how things go about. Start with the cash book, go ahead, prepare double entry, journals, ledger accounts, balancing them off, prepare trial balance, then from the trial balance prepare the trading profit and loss account plus the balance sheet. So I think that is that. Thank you for paying your kind attention.